Hi everyone, this is Red with RedDragonLeo.com, and today is Thursday, another up day in the market, although I thought we was just going to have kind of a flat day, a spinning top or whatever. But we actually went up a little bit. More manipulation in the market. Just wiped out a lot of bears. If you haven't been over to Tim Knight's site, Slope of Hope, you should go over there and check out what he's wrote about it. He was, pretty hurt too, and so were many of the other people. I was just talking to Anna on the phone, and with Hot Option Babe. Everybody knows who Anna is. That her and I are very good friends, and we were just talking about how manipulated this market is, and how this stock market, was invented and designed to rob your money, to rob you. It is just like the lottery is designed to rob you, just like Las Vegas, and the gambling casinos is designed to rob you. So, and that's exactly what they did here. Was they robbed a lot of bears yesterday and today. Now all the bears are bullish. Everybody's bullish. And you remember from some of my other videos earlier this week, down here in this area, I kept saying that I thought that, we were getting close to the bottom, especially after this triple bottom. I thought that we was going to turn and go up to the 111.17 fake print. Although I had my doubts when, after this move up and then this turn next day and sold it all off and then went down there and closed there, I said, man, I tell you, I think this might just fall off a cliff. And I was really having my doubts on whether or not we were going to go up to that 111.17 print, but by golly, it looks like we could hit that thing tomorrow if they really wanted to, the way they're moving this thing up. Do I think that's going to happen? No. This thing is moving up, having a bullish cross here. It is touched, and we're above the zero here, and everybody's now looking, for this thing to put in some type of lower histogram tower trough then over here, and then roll back over into primary wave 3 of 3. Assuming that this whole move down here was 1, then you got 2, and then you got a 3 right here, and you've got 1, 2, and 3 inside of a 3. So you'd have 3 inside of this third wave down would be 3 inside of this 3 inside of this whole 3, if this is the final top of primary wave 2 and this actually started primary wave 3 down. I don't believe that to be the case because of our diamond 118.16 print. That fake print tells me that we're going to go up to approximately 11,800 on the Dow, which would be approximately 1260 to 1280 on the SPX. And I think that'll be the top of primary wave 2. And then we'll start primary wave 3 down. Now, I don't think that that's where we're headed right now. I have a feeling that they're going to shock some people tomorrow, and we're going to sell off hard. Yeah, it seems unreal that after this negative day right here, that they could turn this thing and go up, from this low down here at 1040 to here, literally in 3 days. That's 50 ES points, 500 Dow points, literally in the bulk of it in 1 day. But in 3 days, they just annihilated the bears right there. So now that everybody is bullish and looking for 1100, and I'm not saying it won't happen tomorrow, but tomorrow being options expiration on the weeklies, they've got to pin this thing somewhere. They are going to pin it where it makes them the most money, where they get to keep all of the money from the calls and the puts that they sold. So you've got to ask yourself, what is that number? I do not know, but I think it is below 107 on the SPY, which is 1070 here. So when this thing turned and gapped up and ran up that day on Wednesday and squeezed all the bears, there's a gap here, we can see on the 15-minute chart, I believe. Right there is a little gap. And this was the brief consolidation before they ran it up higher again. So the very quick bulls got on board there. And the ones that were a little slower to the draw got on board here as they seen the bullish flag. And it played out today. Went up and traded sideways again and played out. Looks like maybe another bull flag. So, you know, there were several of them. And it popped up here to 1090. Now, where everybody's looking for 1100. I mean, so is it going to get there tomorrow? I don't know. I just think a shock right now, just like they shocked the bears here. I think a bull shark is overdue right now, and a shock to the downside, and come down here in a B wave down tomorrow, at least below this 1070, to pin it at a place that's going to benefit them the most on the puts and calls that are expiring tomorrow on the weeklies. So with that gap still being there, that's a signal to me that they might bring this thing down tomorrow. And, you know, with that 103 or 105.39 fake print, we could literally go down there to that print and then rally back throughout the day and close somewhere between, you know, maybe, well, that would certainly fill the gap, but close between 107 and 106 on the SPY would be my estimate. I think 1065 puts the weekly, close right here. It would be, if you got about 1065 to 1070, I think you'd probably close positive and stay in this major trend line here. So although it pierced it twice, I think they'll end up closing as positive on the week. Of course, I mean, you're looking at it now and you're thinking, of course they're going to close it positive, but you know, you never know. If they take this thing down, they could close it negative, but I don't think so. I think they're going to close it positive, and above this line on this weekly. And then at that point, they might go, I think they'll go up again next week and hit that 1100, that 111.17 print. Not much going on that next week. Remember, there's a 3-day weekend coming up. Monday we're closed for Memorial Day, if I'm not mistaken. So traders will be coming back on Tuesdays hungover from drinking and partying. They won't be doing a lot of trading on Tuesday, so it'll be light volume there. So it'll probably, I haven't seen all the economic data out for next week, but it'll probably be pretty light volume next week, which means they could run it up pretty easily. So just to me, it just would make sense for them to close this where it benefits them the most, and I think it's below 107. I don't know that to be a fact, but there's, I think, over 50,000 calls sitting at the let's see, sitting at the 107 level, I believe, if I'm not mistaken. Let me, I'll tell you what, I will go right here and we'll see what it is. But I don't think it's, I don't think it's going to go up higher tomorrow. I mean, I may be wrong, but on that, but I just don't think it's going to. So you look here, and you can see we got 73,000 calls sitting at 107, 39,000 or 38,000 there at 108, 29,000 there. So you got 29,000 there on the call side, 9,000 on the put, 29,000 on the puts here, 38,000 here, and then 42,000 here. Now, where would you pin it to where you pay out the least amount of money? If it was me, I'd pin it here at 107 to 106 area, somewhere in that area, probably right around 107. That's where I'd pin the thing. You know, I wouldn't pay out these people. Why? Why would you want to do that? Look how many contracts traded today. 32,000 today traded. 81,000 traded here on the puts. And I looked at this earlier in the week. It was a lot higher than 42,000. So a lot of these were closing out their positions. thinking, oh man, we got squeezed hard, let's close out our puts. So this was today's volume, 81,000 and 89,000. These numbers were not that high. They were not this low. They were higher yesterday and the day before, if I remember correctly. And so a lot of that is people closing these out. I mean, well, common sense is going to tell you that, because if the total amount left is 42,000, but you traded 81,000 today, that means a lot of people closed out their positions, thinking that they're done. So if you think outside the box here, and you know, just like the Bears got gamed on this head and shoulders here, 1, 2, 3. Even I was, like I said, I was wondering if we were going to fall off a cliff or not. I know I was calling for that 111 all week, but I have to admit I was really starting to doubt that we were going to move up. But I never seen a move like this coming. That just shows you how manipulated and controlled this market is. This hurt a lot of people. How the crooks stole your money. Not how the Grinch stole Christmas. It's how the crooks stole the average retail person's money. That's what this game is all about, stealing your money. So you got to be quick, and it always happens overnight, and you just get shafted. But anyway, on this 15-minute chart, as you can see, we're in a rising wedge. You can draw a line from here up to here, and you keep on drawing it, and certainly we could go up again tomorrow. It could be a non-eventful day. But I just think that non-farm payrolls report is going to be ugly. And I think it's going to sell off. It's going to fall out of this wedge. On this chart here, as you can see, the histogram moving averages here are ready to peak and roll over. You can see we're sloping down here and getting ready to go below zero. Now, this is a larger time frame here, because this is on the 65 period, 90 period, and 12 period on this one. And these other two down here at the bottom are 12, 26, 9, 12, 26, 9. So although they already peaked and kind of chopped around here in the negative below zero and look like they're going to hook back up, I don't give them as much power as this larger time frame, because this is kind of more powerful. This kind of coincides more with what the 60-minute chart is looking like. Plus the full stochastics here is already overbought. I just don't see it popping up too much more tomorrow. I think it's done on the upside. I think we're going to have a B wave down, and basically, if you know, this was our A move up, I think we're going to have a B wave down and then a move up next week to the final 111.17 print to hit that, and then our wave 3 down. So that would fool a lot of people. Every bear I know is now bullish now. Everybody's bullish, and they're just ignoring this falling off, assuming that it's just going to roll down here and put in a really small tower or below the zero line, trough low. Or maybe not even do that. Maybe just recycle back up. Maybe put another hump. And that's what I would say normally, based upon the daily. Certainly when you look at the daily, it's curling up. So the daily is giving power and supporting this move up as it's doing this. So logic would tell me that since the daily's pushed up on the 60 is going to put in a very low, trough low, or not put one in at all. Just simply make consecutively 2 or 3 humps lower, like this. 1, 2, 3, before it finally rolls over. And stay overbought there because the daily's supporting it. But you have to factor in the manipulation. And the manipulation tells me that OPEX is tomorrow, and they're going to pin this thing where it benefits them the most. So I think everybody that got long there, I think is going to get shafted. I think they're going to take it below that 1080, and I think 1070's area to 1060 is their target. That doesn't mean we can't go down and hit that 105.39 fake print and then rally back, because that's possible. Seems unlikely. It really does. But, you know, we know it's going to be hit. Will it be hit next week? Yeah, possibly. But it could also be hit tomorrow. You know, nothing's out of the cards. After a move like this, a move right back down wouldn't shock me. I'm not saying it's going to happen, but if you did not take your profit today on your longs, anybody that went long that was able to do that, you should have. You certainly should have, because you don't know what's going to happen tomorrow. That could roll over and just really sell off hard. But anyway, running out of time, so that's what I'm looking for tomorrow, is a move down out of this wedge. Good luck, everyone.